Hello, everybody. Welcome to Intermediate Accounting 17th edition video solution walkthrough. This is for Kiso, Weingen, and Warfield problem 19.1. Textbook authors are Don Kiso, Jerry Weingen, and Terry Warfield. The question used in the presentation is copyright 2019 by John Wiley and Sons. All rights are reserved. This is for educational purposes only. The video may not be distributed or redistributed without the express permission of Wiley. This solution presentation is copyright 2019 to 2022 by Bennett Tchaikovsky. All rights are reserved. The opinions contained within this presentation are those of Bennett Tchaikovsky and not the authors of the textbook or of Wiley. So let's go through and have some fun. Okay. So this one is a really messed up problem, but I'm going to show you why and we'll solve it together. It's going to be a lot of fun. Okay. So this question is really having us go through and work backwards. And the way that this is doing is to say, we would normally be starting here with pre-tax financial income. And let's just go ahead, and we don't know what that number is, but we'll go through and solve for it. So let's go ahead and take a look. So depreciation reported on the tax return exceeded the depreciation reported on the income statement by $120,000. So we're in 2020. And this is going to reverse itself out over the next few years in 2021, 2022, 2023, and 2024. So what this means is that I took temporary difference, depreciation, expense. So in 2020, it tells me right over here, it exceeded, my tax return exceeded on the income statement. So this would be a deduction of $120,000 from my pre-tax financial income. But then in terms of how this is going to reverse, it's going to reverse out by $30,000 over each of the next subsequent 4 years. Okay. Interest received on municipal bonds. So my interest on municipal bonds, basically, if I had pre-tax financial income, that municipal bond interest would not be taxable. So this would be a deduction of $10,000. Okay. And this is a permanent difference. Number 3, rent collected in advance on January 1st totaled $60,000 for a 3-year period. Of this amount, $40,000 was reported as unearned for book purposes. So on my pre-tax financial income, I would only be showing $20,000 as income for the current year because I have not yet earned that. But for tax purposes, if I've collected it, this is going to be, I'm going to have to add back in the amount of cash that I collected because that is taxable to me now. So this would be a positive amount of $40,000. So rent collected in advance. So I'm going to be paying tax on this now. However, in 2021 and 2022, these would be going through and reversing out. Now, why this question is messed up is because it says over here, income taxes of $160,000 are due per the tax return for 2020. So my taxable income, we don't know what this is, but my income tax rate of 20%, this is going to equal my income taxes for 2020, and this is going to be $160,000. So what I need to go through and do for this particular question is I'm going to have to go through and work backwards. So if basically whatever times 0.2, so if we say 0.2x equals $160,000, x is going to be equal to $160,000 divided by 0.2, x is going to be equal to $800,000. So if I have 800,000 over here, if I take $800,000 and I multiply that by 0.2, I get 160. Now here's where the fun part begins. If to solve for pre-tax financial income, what is that amount going to be? Well, if I call pre-tax financial income, if I call that number Y, so if I say Y minus 120 for the excess depreciation I'm taking for tax purposes, minus 10 on the interest on muni bonds, plus 40 for the rent collected in advance equals 800. So what is this going to be? Y minus 90 equals 800. Y is going to be equal to 890. Okay. All right, so my pre-tax financial income is going to be 890,000. I want to make sure that this works. 890 plus 1 minus 120 minus 10 plus 40 equals 800. I like this question because it's having us work it through two different angles, or a couple different ones, but it's working backwards. And I think it's, at least it's good for me. I'm not sure how you all feel about it, but hey, like, let's have fun together. Okay, so we've computed our pre-tax financial income, and now we're ready to do the fun part, which is prepare the entries to record income tax expense, deferred income taxes, and income taxes payable for both 2020 and 2021. Let's go ahead and start out over here with 2020 first. So 2020 on 12/31/20. If you've been watching my videos, you know what I like to do first. I like to go income tax expense, current, and this is going to be $160,000. My income tax expense, or sorry, my income taxes payable, current, is also going to be 160. Now, my deferred, so over here, I'm prepaying for taxes. So let's go ahead and do our deferred tax asset first. So my deferred tax asset is going to be this rent collected in advance. So this is going to be 0.17, 0.17, because my income tax rate for 2021 and future periods is 17%. It's 20% in 2020, but it is 17% in future periods. So my deferred tax asset as of December 31st, 2020 is going to be 6,800. So over here, I'm going to write in deferred tax asset, and this is going to be 6,800. So as of 12/31/20, my deferred tax asset is going to be 6,800. Let's do the deferred tax liability. So kind of using the same part over here of using the 17%. If I multiply this 30,000 by 17%, I'm going to get 5,100 across the board. If I add these up, because remember, I'm getting a deduction now, I'm going to have to pay for it later. My temporary difference, or my deferred tax liability, is going to be 20,400. Okay. Now, if you've been following with me on how I go through and do these problems, you know the next step I'm going to do, which is income tax expense deferred. And this is whatever I need to do to balance. And it's really just going to be the difference between the deferred tax asset and the liability, or this is going to be 13,600. Now, for this particular question, right, it's going to say the answer, the solution of textbook is going to show 173.6, or the sum of these two numbers. That's fine. But as the reason why I'm doing this is because if I'm ever asked to go through and to prepare the income tax expense section, I'm going to have that part already done. So how would I go through and do the income before income taxes? This would be for 2020. My income before income taxes is going to be 890,000. Okay, less income tax expense current, less income tax expense deferred. And this is just coming right over here from my journal entry. So my income tax expense current was 160. My income tax expense deferred is 173.6. So my net income is going to be the 890 minus 160 minus 13.6, or 716,400. So, and then let's go ahead and just do this over here before we get to our next period of time. So my deferred tax liability as of 12/31/20 is 20,400. My deferred tax asset over here is going to be 6,800. Now, in the second year, what's going to happen? Well, 1/1/21, these balances will roll forward. The assets and liabilities are not closed out to retained earnings. So these are going to roll forward. But now what I'm going to have to go through and do is to say, once I reach 2021, what's going to be happening with my deferred tax assets and my deferred tax liability. So if I'm over here in 2021, and this is now going to be the current year, my temporary difference for the depreciation expense for 2022, 2023, and 2024 is still going to be 30,000, 30,000, and 30,000. My income tax rate for these future periods are still going to be 17% all the way through. Also over here is that my rent collected in advance for 2022 is going to be this 20,000. All I'm doing over here is I'm going through and basically pulling through these deferred amounts into the next year. So what the question is out asking me for is, say, compute income tax expense, income taxes payable for 2020 and 2021. They're telling me to assume taxable income of 480,000 in 2021. So what this question has really done for us is, for 2021 at least, that this is giving me 480,000. So they've kind of done some of the work for us already. My income tax rate is going to be at 17%. So my income taxes for 2021 are going to be 81,600. So for 12/31/21, I'm going to have income tax expense current. I'm going to have income taxes payable current. This is going to be 81,600 and 81,600. Now, what I now need to, though, to figure out is to say, okay, what are my deferred tax assets remaining and what are my deferred tax liabilities? Well, over here, my deferred tax asset is now, I had 6,800 before, but my ending balance now is going to be 3,400. For my deferred tax liability, my balance was 20,400, but my ending balance now is going to be the sum of these three different parts right over here, or this is going to be 15,300. Okay. So these are going to be what my ending balances should be as of December 31st, 2021. So again, what I went through and did over here for this particular question is that this already gave me the taxable income. I didn't have to go through and do this computation. It already gave it to me, told me it was 480. So what I'm now really looking at as of 2021 are these amounts that are over here that are these remaining temporary differences. So I've computed that my asset should be 3,400 and my liability should be 15.3. So when I look at this over here now, I go to my deferred tax asset account. I had 6,800 in it here. It should now be 3,400. So to make this balance, I'm going to need a credit to my deferred tax asset account of 3,400. Okay. What I'm also going to need over here is for my deferred tax liability. What am I going to need to do to balance? Well, this is going to be 5,100 right over here. Okay. So my deferred tax liability is going to be 5,100. So what do I need to do to balance? Well, the amount that I'm going to need to go through and to balance over here is basically going to be the difference between the 5,100 and the 3,400, or the 1,700. Now, I would normally be calling this income tax expense deferred. Okay. However, in this case, can we have an expense that is a debit balance? Well, the answer is yeah, but in this case over here, we can also rewrite this journal entry as this. We could just say income tax expense current. This would be 81,600 minus 1,700. And then over here, we can have income taxes payable current of 81,600. And I have a deferred tax asset over here of 3,400. So again, we're coming up with the correct answer for this particular question. We're just going through and doing it a little bit differently. So that's going to be our journal entry. The key thing to do here is to use the T accounts, because remember, as you're going through and doing these temporary differences, this is going to tell you what the balances should be. Then what you're going to have to do is to look at these balances and figure out what you need to go through and to do to adjust the accounts. So that is this question. Let's just make sure we answered everything. We did the journal entries. We did the income tax expense section. And ladies and gentlemen, we've worked backwards and I'm now here. And I want to thank Wiley for allowing me again to use their problems and their exercises to share with you. If you have any other questions, please feel free to ask for them in the comments below. Look forward to seeing you on the next video and have a great rest of your day. Have a good one.